Okay, welcome to Probability of Success. Today we're going to take a look at how to place a simple broken wing butterfly trading strategy. We're going to do that on the SPY. If you can see here on the screen, I've got a chart for the SPY going back to January of 2009, and you can see the market's been primarily trending upward since that time in the long term. But we're going to focus in on where we are now, and I've also drawn in some pitchforks just to give me some support and resistance and so on. So if we just kind of zoom in on this area, we can see that the pitchforks have given us some good support and resistance lines, and also we've got this long-term resistance right in here. So, and as of right now, the SPY is trading at 131.16. This is during live market hours that we're looking at this. And so what we're going to do is take a look at butterfly and then turn that into a broken wing. And typically, if you understand the butterfly concept, with the butterfly you need to have the trade fall within a certain area. So if we look at this and we think that this is actually going to continue higher along this pitchfork and possibly stay within this range between the resistance here and the support in this area, which we also have some support in here as well, then we're probably looking for the butterfly to end up somewhere in this range. So about 134 may be our target range, 133, 134. So we're using the Thinkorswim platform right now, and what we're going to do is create a trade, and we're in the simulated trades area, and as of right now there are only 2 days left from April expiration, so we're not going to use that. But let's go into May, and going back to the chart here, we said we were going to try to shoot for about the 134 range, and so let's come in here and do a 134 butterfly. So we're going to buy a butterfly, and so what we've done is we bought the 134. We've sold the 134, 2 of those, and we bought one of the 135 and one of the 133 put butterflies. So that's a standard butterfly, and we can come in here and now we can see what that looks like. Basically, right now the market's trading at 131.17, and which is right here, and this line right here, and we set our target for the butterfly to be about 134, which is right in here. And at 134, if you look at this red area here, you can see that that about 134 we're going to make about $90, $91 on this trade, and the debit on this trade is about 8 or 9 cents per share. So that's our cost in the trade, and that's our risk, which in this line here, the horizontal, when the red graph goes below the horizontal, is our profit and loss area. So our loss is about 9 cents per share, or for 100 shares about $9, and our maximum gain on this is about $91 on the trade. The only thing, though, is the risk to reward ratio is pretty good, but the probabilities of this trade actually working out are very slim, because by expiration we need to be in this range, which is between about 133 and 135 in order to make a profit on this trade. Otherwise we'll make a small loss. So if we go back to our chart, 133 and 135, so we're looking right in this range that this that the SPY needs to close by expiration for us to make a profit on this trade. So, but there is always a possibility that it could end up below that range. It could go in here. It could even drop down to this lower pitchfork support level. Could even go lower than that. So if we're concerned based on market conditions or pending news that it could go lower, then what we want to do is we want to try to adjust for that, and that's where our broken wing butterfly comes in really handy. So what we do in this case is we still have the same standard butterfly here, but we're going to take and extend this this upper leg of the butterfly out one more strike. So instead of buying the 135, we're going to buy the 136. And so what we've done here is we've eliminated all the risk to the downside. So now no matter where it closes to the downside by expiration, we're going to make a little bit of money on the trade. Looks like about $30. So our downside risk is completely eliminated, and our upper break-even point is 135.21. So if we go back to the chart, our upper break-even point is above this resistance level. So that's a little bit safer trade now. And if it goes anywhere, even down to zero, which of course the SPY is not going to do, but if it did, we're completely protected on the downside. So the only thing is we've moved all of our risk to the upside of the trade, and our debit on this trade has gone up to 78 cents per share, or $78 for this trade. So if it does close in this area here, and we don't do anything to adjust for that, then we'll lose the maximum amount of the debit, which is higher than the butterfly, but our probabilities are much higher since we are protected entirely to one side. So that's the basics of the broken wing butterfly. There are lots of fancy things you can do with it, but we're not going to cover that in this particular explanation. So good luck with your trading, and we'll see you in the next video.